What if I told you that the world's most powerful banks, the multinational corporations that dictate global trade, and even the billion-dollar tech monopolies shaping your future, are following rules written almost 700 years ago? Rules created not by modern economists or Wall Street elites, but by blacksmiths, bakers, and stonemasons in medieval Europe. Today, we take for granted the idea of corporations, patents, trade secrets, and closed-door cartels. But what if all of this, from Wall Street to Silicon Valley, was never an invention of capitalism, but a replication of medieval guilds? This is the story of how medieval guilds became the blueprint for today's financial powerhouses, and how the systems they engineered still run the world, long after the guilds themselves disappeared. But here's the twist. They didn't truly disappear. Their structure survived, just with different names. To understand the foundations of modern finance, we need to go back to the 11th century, a time before stock markets, before central banks, before corporations. Europe was rebuilding after centuries of instability. Trade routes reopened. Caravans, ships, and merchant caravans moved again. The economy was waking up. But there was a problem. There were no rules, no standards, no quality control, no banking, no systems of trust. A bad batch of grain could kill a town. A dishonest merchant could bankrupt a region. A counterfeit coin could collapse a city's economy. Then something happened. Craftsmen, traders, and merchants began to form secretive groups, not unions, not companies, something else entirely. They called themselves guilds: blacksmiths, stonecutters, glassmakers, shipwrights, butchers, bakers, bankers. Each guild operated like a closed society, with hidden rules, secret rituals, and a goal: control the market. They had oaths, they had ranks, they had monopolies, and they had enforcement. If you wanted to work, you joined them. If you challenged them, you were ruined. If you betrayed them, you disappeared. Does any of this sound familiar yet? Think about Google's search dominance, Coca-Cola's secret formula, Apple's closed ecosystem, pharmaceutical patent monopolies, cartels manipulating oil prices. These are not coincidences. This is a pattern, a blueprint. How guilds were born. The earliest guilds began for one simple purpose: control who could participate in the economy. To join, you had to be approved. To grow, you had to obey. To innovate, you needed permission. The guilds built a system: apprentice, unpaid labor, years of training, journeyman allowed to work, but supervised master, full member, with voting power. Grand Master ran the guild, controlled the trade. This wasn't just a work structure, it was an economic pipeline, a pipeline still used today. Modern parallel: intern gives employee, gives manager, gives CEO, gives board of directors. A medieval model copy-pasted into the corporate world. And this structure did something revolutionary. It made wealth predictable. Guilds guaranteed income for members. They set prices. They controlled supply. They controlled demand. They eliminated competition. They turned local industries into private monopolies. Today we call that oligopoly. From craft networks to financial machines, as guilds grew, they discovered something even more powerful than trade. They developed confidential training manuals, secret formulas, protected techniques, testing systems for quality. Branding marks the origin of trademarks. If a medieval shoemaker guild caught you copying their design, you could be fined, banished, or worse. This was the birth of intellectual property law. Guilds also invented standardized weights and measures, regulatory boards, licensing requirements, market inspections, capital pools for investment in Venice. Merchant guilds pooled money to insure ships. This eventually became maritime insurance, the foundation of modern banking. In Florence, guilds created the first credit networks. They created bill of exchange systems, paper that represented money centuries before banknotes. In the Hanseatic League, merchant guilds controlled trade from London to Novgorod. This was the first multinational trade corporation. While kings ruled the land, guilds ruled the economy. When guilds became too powerful, but success breeds fear. By the 14th century, guilds controlled food supply, trade routes, labor markets, pricing, manufacturing standards, access to capital. They were collapsing governments, toppling monarchs, funding wars. Guilds didn't just serve the economy, they ran it. European rulers realized something terrifying. They couldn't tax guilds, they couldn't regulate them, they couldn't stop them. So they tried to replace them. How they legalized a new concept, the chartered corporation, a legal entity granted by the state, with monopoly powers, just like a guild, but controlled by the government, or so they hoped. But instead, something else happened. Corporations learned from guilds. They copied their structures, their secrecy, their monopolistic behavior. Guilds weren't destroyed. They were digitized into law. The world had entered a new age, the age of corporate guilds. How guild DNA survived. Governments tried to regulate economic power, but every attempt failed. Anti-monopoly laws. Corporations found loopholes. Open competition, buyouts and mergers restored control. Banking limits. Banks created shadow markets. Labor rights. Outsourcing and automation bypassed laws. It turns out, the guild blueprint worked too well, because it was based on something that never changes, human nature. People will always organize to protect wealth, to limit competition, to control access. The names changed, the strategies evolved, but the blueprint remained. You may think guilds are ancient history, but listen to this. 10 companies control nearly every global food brand. 3 companies control 80% of the US internet. 5 banks control half of the world's financial assets. Big tech employs a closed pyramid training system. Pharma monopolies mirror medieval apothecary guilds with patents. Apple's walled garden, a guild. Goldman Sachs hiring exclusively from certain universities, a guild. Disney owning 40% of Hollywood box office share, a guild. These aren't coincidences, they are continuations. The same methods, the same incentives, different logos. Guilds never vanished. They evolved. From stone workshops to glass skyscrapers, from quill contracts to encrypted trading algorithms, the medieval economy didn't die, it scaled. Conclusion 3 Takeaways and final message. So what can we learn from this? Takeaway number 1. The economy has always been controlled not by markets but by networks. Takeaway number 2. Monopolies are not a glitch in capitalism. They're the original design. Takeaway number 3. If you want to understand the future, study the past, because history doesn't repeat. It rhymes with compound interest. And here's the most important question. If corporations are the guilds of today, what comes next? A new evolution? Or the end of the game? Maybe the next financial empire won't be built in boardrooms, but in blockchain networks, DAOs, decentralized guilds, digital monopolies without borders. Are we about to witness the return of the guild age? If this video changed how you look at history and modern finance, subscribe, because this is just the beginning. Comment below if you want a part 2 on how guild tactics appear in big tech, Wall Street, and global trade today. And remember, the past is never dead. We're living in it.